Okay, cool. Let me... not yet. Let me copy the link. Okay. So, paste that link. And if you guys can join, and then let me know if you can hear me. Because I can't be like a total yet. And because I just figured out how OSB, it never saves my settings. So, audio output, right? It doesn't set it until I do something. Okay, cool. So you guys can hear me. Okay, great. Okay, let's start over. So shadow banking system. So what you can't see can actually hurt you. So when we talk about the shadow banking system, we're mostly talking about the unbanked. So we're taking from one quote from this guy, trying to like describe like the role a bit, but not fully what it means. Like we'll go over that later, what it all means. So the shadow banking system plays in a role in cleaning up toxic assets, but usually that contradicts to like what actually happens now in the shadow banking system, and because we can have a broker not accepting or honoring contracts to buy back a certain amount of bonds for 20 counterparties because agreements were forged by 2 employees. So when we talk about counterparties, right, we're talking about all these hedge funds and family practices or some unbanked institution that's not regulated by the government. And so step one, we have to describe what is the shadow banking system. So when we talk about that, we're talking about the intermediates that are in charge to creating credit around the world. And like, what is their favorite way of doing business? So we have to think about the Eurodollar system, right? So the Eurodollar system is like you have the European Union and the dollar system married into one. So you have, who are they actually? When we think about them, we're lenders, brokers, and other intermediates. It's usually the hedge funds, but they were the major players of the global financial crisis in 2008. So that's the GFC. So here's another definition of the shadow banking system. So the shadow banking system is usually defined by set institutions that carry out traditional banking functions, right? But they aren't regulated, and certain people like that. That's why Bitcoin was created to serve all these people that were unbanked and do all these things. So the shadow banking system, you bet their ass they're probably in that right now to hide their money. So important part of components of the shadow banking institution includes securitized vehicles, asset-backed paper conduits, money market mutual funds, and market for repurchase agreements for investing in investment banks and mortgage companies. So mortgage companies that you think about, what is one that I can toss in my top of head? You have all these REITs, you have Invesco, Investment, Real Estate Trust, and all these other ones that just can't come in my head. So what is the assets that they have? So if we think about the reverse repo markets that we're doing trillions of dollars a week, right? We just yesterday, I think Thursday, we did $760 billion of reverse repos by the Fed, accepted by around 67 to 70 counterparties that they accepted. And And we have to pay attention to what goes on the credit market, because I have said dozens of times that whatever happens in the repo market actually bleeds in the real economy and the stock market. So if we look at what caused the financial crisis, the great financial crisis, global financial crisis, it was the shadow banking system. Okay. We thought they banned them because there was the Dodd-Frank rule trying to like make all these regulations, and we were trying to get rid of them. So, but in that time frame, what actually happened was that the Fed and the government didn't really understand what was going on in the market, in the shadow banking system. And after the GFC, they had to step in and buy all these toxic assets. So those toxic assets are on the Fed's balance sheet, and they don't really care about like paying that off because they'd have no competition to, or no incentive. So home loans, the ones that Lehman Brothers and Bear Stearns, I think, were trading these credit swaps around. And that actually was the case where that actually happened to the housing market crash. Now they're actually back in mortgage-backed securities, right? So if we look at these articles, we have Carl Icahn actually waiting for a short position. Like this was in last year, okay? He's still waiting to it to blow up, but he hasn't had a position because if the Fed acted fast and they bought up everything and did QE to infinity and beyond. Okay, so there's another one that, this is the Big Short. So these are commercial real estates. The Wall Street's cooked books fuels the financial crisis in 2008. It's actually happening again, right? So, this has happened in the past. It's happening again. And this is why I've been waiting for a chance in the future. I'm still paying attention to the real estate market because this is actually my next short position. And I'm going to be betting with them because this cannot go on forever. And if you look, you just go to your neighborhood and you can see what's going on, and you can see all these businesses going out. Small mid businesses actually make the majority of the economy in the United States, besides the corporations, the large corporations. They actually service everything else that goes on in the economy. And what makes the economy productive is the amount of goods and services it imports and exports. So, we will see this again in the next crisis when the repo market starts to give us hints that the amount of money that's being pumped in the market is no longer working. Okay, so I just want you to look at this picture. So this is from 1998 to 2012. If we look at, the market itself, okay, these are the swaps. So we started out unallocated. So unallocated, we can assume that's the shadow banking system. Okay, and we look at the amount of things that have been going up. So we have the options, options, futures, and the credit. Okay, so credit has been going up, and then we have these credit swaps that continue to going up. This is up to 2012, but I expect this to be much higher. It is today. See how it is in the trillions? We're over that. We're probably at 2 quadrillion right now. And there is actually a relationship. So if we see the shadow banking system, the repo market. So if we start here in the I'm just gonna tell you a story. In the 1990s, these group of people called the Solomon Brothers bought a shit ton of U.S. treasuries, and to the point that the U.S. government limited them, and they kept buying. They had to go in the shadow market, right, to get more of these, because the U.S. government could not understand why they were doing that. But when we look at it, right, we see that. Let me get my pointer out. So let's. Okay, so concurrent slide. So if we look at my pen, let's go over my pen tool. So if we look right here, so this is where they start buying. Start buying right here. They saw this because at that time the economy and the GDP was growing, and when that happened, the repo market was expanding. So this was the whole repo market to 2008, and then we had that the global financial crisis. So how is it today different from now? Well, it still plays a huge role in all these other markets. We have a shadow banking in Brazil that has increased so much that it's telling us something is actually very wrong with these countries. And we don't know when their market's going to blow up. I'm hearing something from China right now, with their bonds. There's something going up with their bond market right now, Chinese bond market, even though the world itself, they're buying Chinese bonds. But why do China needs to do rate cuts on their bonds? And that it's telling us that something is going wrong, and China needs to stimulate growth, even though their economy has had a head start from everyone else from last year to produce all these other things, goods and services that they export. So, we have to, and then how do we know what has gone on after the GFC crisis? So, as we said before, the repo market is something that I pay attention to because the repo market is the backbone of the Eurodollar system. And so what is the Eurodollar system? It is where large institutions will place U.S. dollars in foreign bank accounts to earn a higher interest. These dollars held outside the United States are Eurodollars. A U.S. denominated account outside the United States is known as a Eurodollar deposit. And these deposits have maturities of 180 days and are traded between European banks, much like a federal fund loan in the United States. So we talked about this graph before, this one right here. So these are the derivatives in the shadow market. So going back to 1998 and to now, like, we have the expansion of the repo market and the derivatives to the 2008 to the financial crisis. If we picture an example as the Eurodollar system as the heavy pickup truck that facilitates global growth in the market, then the repo market is the engine that needs money to function. And after the GFC crisis, the global shadow banking system broke down and the US government had to bail them out. So what does the shadows tell us? Okay, it tells us that the system is broken. GDP growth isn't facilitated by production. And GDP growth is happening as a result of government printing and spending money. So what is a healthy economy, and what do they mean by production? So if we look at that, so if we take, for example, let's say we have Bob, right? Yeah, let's do Bob with a smiley face, and then he makes milk, right? So this is milk from cows, and the bank, right, gives Bob, so dollars from bank. So this is how it functioned before. So the bank will give Bob milk to sell to the market, right? Because when Bob takes a loan from the bank to make milk in the market, he earns a profit. The market gives back to Bob, and Bob has money in his pocket. So let's change color to green. And then wallet's pretty happy, so it has $1, and some dollar goes back to the bank, right? This is what people have done always in the past, and the bank continues the cycle. But since after the GFC crisis, this system does not work that way anymore. We just keep borrowing, and you have to prove harder to the bank that they can give you a loan to produce this system that, it comes around every time, and the rinse and repeat. This is what facilitates global growth. Is like the banks have to be willing to give you some money to make money. So this is actually what we look at. So if we look, this is the public debt to percentage of GDP. So we look right here from the 1990s to 1988, totally flat. We go up a bit in the 80s, flat. 2000s, taper off. And then after GFC, we just exploded. So it tells us right here that the government was not spending that much to kind of bail out the economy, because it tells us that the shadow banking system didn't really need that much money, and the shadow banking system is the engine that was functioning correctly until the Fed has stepped in and put the rain on money to come in here, basically. So see, this is what I mean. So if we look at the excess depositor, completely flat. So we can actually go and try to find this, but I believe the numbers right here were just in the 2 billion ranges. But now we're actually in the trillion ranges of deposits. So they kind of discontinuous because they don't want people to know. But from the tapering off right here, where they were trying to go back to right under, they didn't need that much money, to at least 2009 level. Well, that didn't work, because then I think institutions were trying to deposit money somewhere else, and they're trying to place to park their money. So that's how we know, this is government spending that's creating all these excess money that from 1985 to 2008, the government has been on the footstool, on the gas pedal, since for at least 18 years, going on 13 years already. And it's not going to stop, because if they step off the brake, the shadow banking system, we're going to feel it. We're going to feel it really hard. And that's when we know that the collapse of the system is it's completely, we have nowhere to go, and that creates a net crisis where the banks start failing. So if there's so much trouble with the system, what is the plan? With the shadow banking system, there's also shadow government. I know that sounds like a conspiracy theory, but if you look at the global elite's plans, they're actually calling for a reset. And the global elite's plan is to reset the whole system, the whole monetary system, and the whole entire way that we do money, and a new government where everyone owns nothing and be happy. But that actually translates a system of renters, and it puts the blame on other things. Like, you can put a blame on climate change. I just give one example right there. I'm going to change it. So a case would be like, why would Bill Gates buy so much farmland in the United States, and he says he cares about the environment, but he's actually the biggest landlord in the United States? And in Davos, who invited these nut jobs elites to tell the citizens of the world what they should do? All the attendees were rich, elite, and have agenda they change the world for line their own pockets. And the reason they say that is because all these governments cannot function without the debt. So just to give you some statistics, this is actually Q1 last year, in 2020, of debt to GDP ratio. We're actually $26 trillion in debt. That is more than that is like everyone, including the United States, in dollars. And the weight of the government spending since 2011. So 2011 to now, almost every government just spends money into their economy because they know that not a lot of people are working, or like there's not much productivity going on. And that's what you're hearing about automation in the news, because it is much cheaper to replace a worker or two workers for one with a robot. But that doesn't really add to the economy. It doesn't produce taxes that the government can't collect. So here's another chart from 2000 now to 2020. So debt to GDP ratio, really low, like 200%. We had the Eurozone debt crisis that kind of ballooned up. That's the GFC crisis. So the GFC crisis, we dipped and then we went up. And then we had China growth scare. The trade wars didn't do shit. But COVID, that really messed things up. Now we're really going up a little bit more based on these numbers. So if you look at individual countries, households in Canada, they own the most debt compared to other nations. So more than the United States, more than Japan. Corporate, non-financial corporate, so corporations own more, and then government of Canada, they actually own equal amount. So it looks like Canada debt to GDP ratio is nearly 80% of the year. So it's a substantial increase in household debt. Australia, no household debt. There are a few countries that don't have debt in the household system, but government debt makes majority of their GDP. So if we draw this out, we'll think about it. So I'll draw a picture. So So if we look at this one right here, it says developing and emerging markets. So developed countries represent 4 or 5, seeing largest increase in debt to GDP ratio. For a more macro view that debt levels are higher than a similar place around the world. To put these figures in perspective, compare which debt to GDP ratio metric, which compares a country's debt to its economic output, as main applies the calculated making by the country's total debt divided by its annual GDP. Having a low debt to GDP ratio suggests the country will have little issues paying off the debt, while high ratio can be at high risk of higher default. So the World Bank should believe that government debt is at 77%. The U.S. government is way beyond that. We look at the debt clock itself, like we can just look at it. So let's discard. So, debt clock. Okay, so just let it refresh. Okay, so if we give it a perspective, 77%, low issue paying off, 1960, 52, 1980, 34, 2000s, 57. Now, okay, so 128%. So that's pretty much we have a high risk of default. And how are the U.S. government actually counts their unemployed is actually very weird. Okay, so we don't actually count the people on unemployment that have dropped out of looking for employment. So we can actually be at a higher unemployment rate than we are right now. And this is how much you owe as a taxpayer. You owe a house payment to the U.S. government every time we keep printing money. And printing money has never worked. Because if we print our way out of oblivion, then we will see things like inflation and discontent. So that's the thing that I want to mention. And so that's the end of this presentation, but I still have more shit to show you. This is not this is just one of them. So there could be a case when we might deleverage all the debt problems. So what does that mean if we deleverage the debt? That has major implications. China, for example, is the case in point. They deleverage themselves a lot from U.S. And they don't hold that much U.S. treasuries anymore because they don't need it anymore. And they are pretty much buying gold because they have a balance sheet that allows them to spend and also save. And that is like what every government should be doing, is they should have an emergency fund. But the governments today, they don't really have emergency funds. So every government is like your drunk, insolvent Uncle Sam. So these are all like real reports. You can actually find them. I just want to show you another one. Oh yeah, and here's another picture where you can actually see the Chinese have their own version of the shadow banking system, and it's actually kind of crazy. Like you can see, if you compare their M2 money supply, and because when M2 expands, that's usually like banks and corporations generating these dollars to expand the money supply. But right now, the money supply that has gone parabolic, while the money velocity of M2 money velocity has gone down. That means like that's all government money printing, and that's not actually getting out to the real economy. So if we have no one spending money, right, then how is the government going to collect taxes? So what role did the banks play in the shadow loans? So, you know, it's really interesting. Like, okay, Chinese shadow loans consist of 3 major components: trust loans, bank assistance, and trust loans. And I just learned about this today. So if we look at China's shadow banking system, because then their economy grew as a result of what? Their shadow banking system. That's why we see like the metropolis areas expanding from fishing villages to like mega metropolis cities, and they look nice. It's because there is a relationship. If the repo market and the shadow banking system expand together, that means the system is playing a role in global growth, and a country's economy is also growing. And how does that play into the stock market? Well, you actually see the stock market growing organically with price discovery. When you have the government involved in price manipulation of the shadow banking market and the repo market, and giving free money to these people, then that growth is not organic. It's actually manipulated by the government because they want this they want to keep a floor on it, but that also causes pain and suffering for other people, which is the people like you and me feel it on a day-to-day basis at the consumer level. So let's see. And so we're just going through and we're just reading all these articles about what's interesting. So here's another example of why, like, it's from Seeking Alpha too. So shadow banking system, you know, how your commercial lending, you have your assets in liquid, commercial and consumer credit, relatively stable core deposits, and then you have these firms. Okay, so they have Merrill. So Merrill Lynch is also was a investment hedge fund that got bought out by Bank of America. You have Lehman Bear, GE Capital, SIT. I don't know what's these ones. And then you have investment banking. So assets generate liquidity structure. So yeah, this article explains why they would need it. So let's. So Paul McCarthy was the first one to coin that Macaulay to coin the term shadow banking in 2007. So these were risky assets, you know, the commercial paper, what we talked about earlier, and they do trade on the market. It's just like we, the public, cannot do it. It's like between the shadow banking system and commercial paper between corporations. Okay, so the collapse, yeah, see what happened right here, 2008, and to now, like, that's what happened. When it collapsed, that trickled back into the economy. So we look at the government-backed securities, nothing, and then we just exploded from here. So those crazy guys in the 90s who bought asset securities, I think they saw that coming. So the expansion in the repos. Okay, so shared bank deposits by FDC insured. I have no idea how to read this. But okay, so shadow banking tries 2009 and declined after. So we see 1993 quarter 1, the expansion. So it's and then contraction. So let's see. For instance, Tommy has read a fact by 1993. 70% of corporate brawling took place outside the traditional system. So that's what I meant earlier. Like, you know, they don't want to do it the traditional way. They want to do it outside the system because there's no rules, and they like that. Lending clubs. So, you know, I didn't know Lending Club was part of it. You have Sam's Club and Quicken provided system to many millions of people. Okay, so trying to read this. Okay, so at the same time as deposits go up, the shadow banking goes up too. And because of this, when we have the shadow banking system, we have consolidation of these banks. That's what happened in the GLC crisis when JP Morgan bought all these other banks. Like, I think they bought Washington Mutual. Bank of America bought Merrill Lynch, Wells Fargo. I don't know about Wells Fargo. Citigroup was out of luck. Goldman Sachs got were lying their asses off and already shorting the market already. And now we used to have more banks. Now we just have the big 5 banks. So the shadow banking system has played a part in the growth of these 5 banks. So I'm gonna put a link in the trade talk, and you guys can take a look, because the shadow banking system actually helps the big banks basically. So that's what I want to show you that I couldn't include in the presentation, because I actually did this under an hour when I came back from the gym. But you guys, if have questions, then let's go over it, because I may be able to answer it. Ooh. Okay, so I'm just gonna ask questions because this, just understanding like macro will help you. And since this is recorded, I confirmed there was sound, so I'm hoping no one got the memo, because I did say I was gonna do it today. I was just like, we were supposed to do this at 10 a.m. Pacific time, but then I had to run errands, and then I just came back at 12 to like quickly put this up, so we can actually go over like questions that you guys have about this.
Tiff, I probably missed the previous lessons, but what does repo mean, or what is the repo system?
So the repo market is a place where